This TFMR podcast is brought to you by your friends at JM Bullion. Visit jmbullion.com for all your gold and silver bullion needs. Welcome back to your TF Metals Report podcast highlights for the week of August 16th, 2021. It was a fairly quiet week with all eyes looking toward next week and the appearance by Chief Goon Powell on Friday, August 27th at the Fed's annual Jackson Hole Down. As this week began, there were a number of items that caught our attention, but one of the things we discussed on Monday, August 16th, was the growing disinvestment of central banks around the world in U.S. Treasuries, while at the same time increasing their investment in gold. IMF gold reserves plotted with world Treasury holdings. Okay? Rising together, going sideways together during the whole taper part of the equation, right? Fed trying to trim the balance sheet from 13 to 18. And now look at what world Treasury holdings, this would be central bank Treasury holdings and IMF central bank gold reserves, they're not buying it the second time. At least that's what it appears. Again, as I wrote just this morning, Brazil and India massively adding to their gold reserves now. So central banks wisely not buying any more treasuries. Okay, we'll keep the ones we've got, but you're going to have to monetize the rest yourself. And we're going to take some of our dollars and we're going to be putting them instead into gold. That's what this chart shows. That's a long-term trend that is our friend. Every day at TF Metals Report, we regularly review 6 to 10 charts, bring everybody up to speed on the changes that took place that day and giving us some idea what might happen going forward. One of the things we discussed on Tuesday, the 17th, was the very short-term chart of COMEX Gold, a clear uptrend off that washout smash the Sunday night prior that seemed to indicate that a test of stiff resistance at 1800 was imminent. Here's part of that discussion. Next, let's update those 1-month charts that I showed you yesterday and again this morning. The first one is the 1-month chart of December gold. Again, clearly holding support at 1800 in the first 2/3 of this chart. Blasted down through there after the BLSBS and then blasted again Sunday night, the 8th. We've been recovering since. Yesterday we looked at this trend line, okay, that we've now broken down below. But the trend line was going to carry us to 1800, and for all intents and purposes it did by getting to 1797.50 earlier today. So now it's, that little mini trend of a week has now been broken and we're looking to pull back. So how far would you expect gold to pull back? And again, in the context of a rising dollar, still has a little more to go probably on this, and the FOMC minutes and everything else. Well, you clearly look at those lows from a few days ago, or even back on Sunday night, down here on 1775. But there's no reason to think, really. I mean, you could pull all the way back to 1760. I'll show you on the daily chart in a minute why, just a reminder as to why 1760 is so important. But you can see a little pause here. I mean, these are 2-hour candles. See a little pause back there on the 6th after the BLSBS. 1760 was support. You can see on the 11th and the 12th how it was resistance. We could easily fall back to 1760, and it wouldn't really be that big of a deal. It would be fun, but you can see where that's a possibility. On Wednesday the 18th. And if there's more supply than there is demand, price is going to fall. Well, that's exactly what's happening now as silver has become about the most hated investment on the board. That'll change at some point. And if you're a contrarian investor, that's something that should catch your eye. But for now, the chart does not look very good. And then silver looks like it wants to dump one more time. Remember when last week when they pounded gold and I said, yeah, it'll probably try to come down there again. Usually you get a big washout like that. Creates a spike low, and then you kind of round over and come down and try that out for support. So far, that hasn't happened in gold. So far, we're working on that in silver, as you can see by looking at the silver chart. 23 should be support, as I keep laying out for you. We're in a range between 23 and 24. But, man, I could sure see a dip to 22.50. If you're an aggressive trader, and that might coincide with a bottom in the GDX at that 31, 20, 25 level that should be that ultimate level of support. Maybe that'd be your chance if you really wanted to step into the casino and swim against the tide, be the ultimate contrarian, buy some when things look the worst, all that stuff. A dip down here to 23 or below maybe that would be your opportunity. I'm not going to. I might even close my option account because all I do is lose no matter what. This chart just looks like it wants to roll over and test 23 again. At the same time, gold looks like it wants to test at 1800. So it shows you how much, you can count on the charts sometimes. Speaking of lousy-looking charts, on Thursday the 19th, we spent some time discussing just how terrible the charts look for the GDX and the GDXJ. GDX clinging to important support just north of 31, but the GDXJ looks even worse. Here's a little bit of what we discussed regarding the large cap mining share ETF, the GDX. So anyway, we're not there yet, but where we are, unfortunately, is in a lousy place with the shares. So we're going to close with the GDX and then look at the GDXJ, which is even worse. GDX on the daily chart. Okay, this is just this year. And it was just back 90 days ago, not even that we were at 40 and now we're at 31. 20 some odd % down. Brutal. Notice back here at the 1st of March, there is a close here. See that? That candlestick? There's a close at 30.90. We're at 30.96 or 31, wherever today. A daily close below 30.90, that's just not going to look good. And we take out a daily close below, what is that, about the 3rd of March, hanging down here even lower to 30.60s, 30.65. That'd be particularly bad. It looks bad enough as it is. But if we can reverse tomorrow, rally back up, get back to 31.50 or so, then situation won't look quite as dire. Here's a chart I posted earlier today, the weekly chart. Again, there's that cup level that's about 31.50, 31.25, wherever you want to draw it. We're clearly below it. We're bouncing off of it when I drew this chart up, 31.27. Like I said, we're actually closed 31. Again, you can see if you look really close in March, there's a little tail hanging down there. That's what I just showed you on the daily chart. But then a quick recovery. So it's all not over yet. We're not doomed. But we need to hold this level. And on Friday, gold has posted a small gain while silver has managed to bounce back from an earlier thrashing that took it below $23 again. And we look to finish the week really mostly range-bound. Not a very good week for silver, but a reasonably solid week for gold, but really in a tight 1% range all week long between about 1780 on the downside and 1800, which was expected to be pretty stiff resistance on the upside. And will likely stay there all the way till next Friday. There will be some volatility in between, the flash PMIs that we get on Tuesday, the durable goods report that's coming as well. All of those economic data points will provide some volatility, but all eyes will be on Chief Goon Powell and his appearance at the Fed's annual Jackson Hole Down next Friday, 10 o'clock Eastern Time. Will he discuss taper? Will he discuss anything of interest? The market sure anticipates some sort of taper information. What if he doesn't provide it? Will it be a sell the rumor, buy the news event for COMEX Gold and Silver? We'll see. By the time you listen to this weekly summary next Friday, we'll know. But between now and then, we wish you a happy weekend and a successful week next week. And we look forward to having you join us again next Friday for your TF Metals Report weekly podcast highlights.